Hi guys, how's everyone doing? Hopefully everyone is doing good. Um, I'm back again with another video as I promised. I wanna start dropping each and every weekly activities on the channel, and hopefully you guys find these helpful if you're planning on getting a challenge or if you're doing a challenge already. Um, remember the last drop or the last video that I released on this challenge. I told you guys that at some point I was only left with $30 before I made the target, but then now I'm back at how much is it is it 80 $91. I'm getting a little bit further from the target, but I'm glad that it's happening because it's also happening in a in a controlled manner. It's not a boom and bust uh situation where I make almost close to the target and then I lose like almost back to zero profits. It's well managed, and I feel like that's what trading really is. You just have to manage your risk. Be a good loser. When you lose good. That's the only way you're gonna survive in this trading arena. Because at some point I was at 7.41%, right? Now I'm at 6.19, which is cool, which is totally fine. I mean, the equity curve still looks steady. As you can see, it has never been below zero profits. It has always been like, climbing, climbing, climbing. Obviously, we find some sort of support right here on the is it yeah, the 5,200 mark. And then from there we've been going up a little bit. But that's not the case of the video. That's not the main reason why I'm doing this video. Let me show you last week's activities. All right. And it's crazy because all the losses are from the same pair. I just don't want to learn my lesson. I showed you guys the two losses on the last video. I just didn't get the opportunity to show you the actual trades that led to these losses. But then if you were paying attention when I showed you my journal, you should have seen the type of trades. If you really pause and look at my trading journal, like the two previous trades or the two most recent trades were these trades, right? But then now last week, on Friday, the 24th, um, I entered a buy on Euro GBP, and it was a loss, right? It was a loss. It was a red day, and it's totally fine. I don't know if I should stop trading Euro GBP, or this is just like that random distribution of wins and losses playing a part right now, because as you can see, my P&L is looking very healthy. There's enough brains for each and every raid. And what are the chances of this happening without me having to go through a couple more losses, before I pass? I was starting to get a little bit anxious because I know how trading works and I know how the distribution is. It might catch you uh at the wrong time, when you least expect it, especially with me. It caught me right before I was only left with $30 to pass the phase one. That's what caught me, which is totally fine. But then imagine if this caught me maybe like on my phase two, and I was just like, going big and like being more aggressive. It would have been over with, So I'm glad that I'm actually experiencing each and every emotion that comes with trading, and my P&L is also reflective of how the market conditions may change over time. I feel like this is just like creating a full experience for me, and I'm glad that I'm going through it, and I'm happy to share this with you guys. And another thing is, let me just show you the Euro GBP trade real quick. So I've been fiending on this Euro GBP. I'm not gonna lie, because it looks like something that I should be able to trade. Look at the 4 hour, right? If you look at the 4 hour, you'll understand that okay, the market overall. Let's go to the weekly. Overall, the market doesn't really look trendy, right? The market doesn't really look trendy. It's just like all over the place, all over the place, and it's quite choppy, right? But then when you go to the 4 hour, you get to understand that price is actually on a bullish move, right? We've had our impulse a little bit. Let me show you guys. We've had our impulse, and then we've had our correction. Impulse correction in a form of a range, right? This was also still a correction in my books. And then we really actually, let me just be honest with you guys. The higher high and higher low waves are holding the way they're supposed to hold, right? But then the impulse is not really convincing. We've only had an impulse from this point to this correction, but then from there on, we've been struggling to make, impulse moves or going into like push phases because they're always short-lived or they're always met to some sort of resistance, right? So on the 4 hour, obviously we had our higher high, higher low. This higher high was barely broken. That's why it's gray, not blue. Because I was like, is it really a higher high? Because the previous one was barely broken, and my waves are only validated if they're only validated if price makes, for example, a new high, a clear high, and the higher low still holding. So if this high was broken clearly, obviously this is a higher high, higher low, but then not because it's barely even broken. I guess my holding wave will still be this one. I'm not gonna lie to you. So I looked at this and I was like, okay, this looks like a range, and this range has happened before on our left hand side, as you can see. It really happened after the continuation pattern or the correction phase. And then after that, we had a young push to the upside. I think this is the trade I took last week, one of the losses. I took a trade or a buy somewhere where did I take the buy? It was up there though. I really thought it was the same pattern as this one, but it was not, and the market dropped on me. So when I entered this trade, I was really, really following a pattern that had played out previously, where price actually broke out of the range. When I say range, I'm talking about the arrowed lines, guys, the dashed arrowed lines. Price broke out of that and then made a push to the upside, rejected lower prices and then made a push to the upside. So I was like, okay, we also have a similar type of range here, and we also have a pattern forming just like previously. So especially here, I expect when price gets here, because this looks like a demand zone a little bit. I expect when price gets here, price to just like reject lower prices. As you can see, I have my 0.17 lot size here to say it will reject low prices. I'll have my entry here, and then it will go to the upside, just like it did here, right? And this, mind you, this was on a Friday afternoon. And it was even a buy limit, because I was like, I'm not taking this trade at any other price besides this demand zone right here, because I really thought it was gonna hold. I anticipated the move to be very, very detailed, like to be in and out, just tap into the demand zone and go up, because it was a drag getting to this point already. And for Friday afternoon, I understand that there isn't much action that's gonna happen for that day, and the move I'm expecting is really impulsive, but I mean the markets didn't really yield the results that I expected. So as soon as the touch was heavy on the demand zone, I just closed. As you can see, I really had my trade set up like this, like, price for price, word for word, everything, just like how it's stipulated on the chart. but I just wasn't comfortable with holding the trade over the weekend. Also considering that it's not really yielding the type of results that I want. If I was still holding the trade, I'd probably I'd be on break even right now, but then I'd still not be convinced that okay, this is the the move that I'm actually trading, right? So I closed the trade at around 6 o'clock in the evening, because as you can see, I have my reasoning right there. So yeah, that's it. And another thing that I realized about my trading is that I take one trade, like I take the best trade uh each week. I don't know if that's a good or bad thing for somebody who actually wants to pass this thing, but I feel like it's a good thing, because by the time I take a trade, I've watched it build up. I've watched it build up the confluences. I've watched it go through different phases where I'm like, okay, now the buyers are in, the early buyers are in, or the early buyers are being taken out, or you get to see the whole flow, the market flow and the whole order flow right in front of you, right? And that takes a lot of patience actually. That also takes a lot of patience, because it's not easy for a trader to not be part of the traders that are being manipulated, or being taken out or being baited. So you have to be able and be willing to stand on business and be like, you know what, I see what's happening and I'm not gonna fall for it. And when it actually happens, even though you're not taking the trade, when it happens, you realize that okay, they're trying to play with me, right? But yeah, I'm about to drop a gem right now. So if you made it to this part of the video and you're trading right now, you're gonna be trading for the rest of the year. I mean, at least until just before Christmas. I'll tell you something. Especially because I talk about this a lot, right? Look, I know I always tell you guys that okay, there's always a plot twist. There's always the market makers uh trying to bait retail traders to enter trade so that you can be taken out, your stop losses be dealt with, and then that's liquidity for them to go to wherever the markets are going to be going. Even though the direction you predicted is right, or the direction you're trading is right, sometimes your stop losses are just too obvious, and they know that you're in the market, so they're just going to wipe that off and then keep moving, right? But let me tell you something. I've realized that in this period, ever since November started, especially from mid-November, those market makers low-key have decreased. Or let me rather say, they are slowly exiting the market space. I don't know if this is really the period for that. They're all withdrawing their money and just like, stepping out of the market for a little bit for the holidays, and they'll come back in January. But I've realized that there's less manipulation on the markets. I'm not gonna lie to you. So that one pattern that looks too good to be true, it will play out perfectly, because the money that is in the market currently is only retail traders. And obviously, um, if patterns form because of human behavior and human patterns, that they're gonna play out, because there's no one who's trying to play against you this time. I mean, don't be reckless, right? But there's always gonna be patterns where you look at it and be like, you know what, this looks too good to be true. Guess what? It will play out. I don't know if I have a pattern like that so far, because my analysis are still like from last week. So I don't know if I have a pattern like that already. Oh, the okay. I don't know. But then just look at your charts, you will see what I'm talking about. Look at your charts, you'll see what I'm talking about. Even now, this Euro GBP, see, it's tempting me because it's looking creating a continuation pattern here. So I might just have to relook into my analysis and take the cells if this is real, because this could really we could argue that this is um impulse, correction, impulse, or impulse, yana, correction, yana, impulse, and then correction, and then impulse, right? So do not, this is like in this period, what I'm actually saying is, do not overthink the patterns that you see on your chart, because they're most likely going to play out, and you're gonna miss a lot of trades if you're still waiting on that huge ass manipulation. And you know, sometimes just go for it. Manage your risk. Just set your SLs and calculate your position sizing properly, and then go for it, because that's what has been happening. And man, I done missed a couple of trades just because I'm expecting the big money to step in, only to realize that the big money is not even in the market to start with. So yeah, appreciate you guys for watching until this part of the video. Let's meet on the next video. Peace.